What's up, guys? It's Pac. Welcome to another market review for July 2nd, 2024. Today was a pretty interesting day, so we'll hop in right when I got on the charts. We'll just start here from our top-down analysis, and we'll just work our way through the day. So you can see here, we're on the 4-hour chart. You can see that I have a couple points marked out here. This is our protected structure. This is going to be our protected low on the 4-hour because of this break of structure right there. And that makes this a weak high. So coming in when I opened the charts, it was pretty early. Like I said, I get on about 5 a.m. Eastern Standard Time, start trading around then. This is about where price was about this time. And I had noticed that we had this change of character right here. Let me draw a line. When we traded above that high, we had a change in character. So it was also a 15-minute break of structure. So I was anticipating that this high was kind of going to be the target for the day. Now, granted, there are things in here that can stop us, but that was kind of what I was looking at. And then if we drop down to the 15-minute, you can see that you still have some of my drawings from today on the chart. I had this 15-minute demand zone marked out. You'll notice the purple and green box. That's just premium discount. So it's in discount. So it's an area that I'm looking to maybe possibly long or short down into that area if I have room, right? So this is about what time I got on. It was right before 5 a.m. And I noticed that we had just had this internal break of structure on the 15-minute, and internal break of structure is just when we get a body closure, right? And it's just going to be more minor than this big old break of structure based on distance and things like that. So we get a break of structure, and then I noticed that we do have candlestick structure, and we have another leg down once we wick. So I was anticipating some sort of trade up in here, like a short, because this is basically a whole new leg that we have here. If I box this up, this is a whole new leg. So if it's going to short, it's going to short from there, or it's just going to run without it. And my thought process was, well, we haven't hit this demand zone yet, so I could probably find a short down into there, if at all possible, right? So we dropped down to the 2-minute as I was waiting for price to come in. I was really just waiting for it to hit this inside bar. So it's just a range on a lower time frame. Just waiting for it to hit that. And I was just, covering the highs and then going 1 to 3. That's typically what I will do. Go 1 to 3. And so if it taps us in, it taps us in. Let me go ahead and mark out session open, which is right there. So we get a tap in there. And that's kind of where this trade started. It took a lot longer than I anticipated, but you can see if I'm tracking our structure, this wick right here means a couple things, right? It means that we're still in bearish order flow, but also we're in some sort of range. So if you go watch my range video, you'll remember that it's a failure to close, failure to do its job, so it's some sort of range. So that's why this high should, in theory, not get ran out, because we're in bearish order flow and it's in some sort of range. The high shouldn't get run out. So see what happens here. I know I held this for quite a long time. And there you go. There's that trade win right there. So that was actually the only trade I ended up taking today. I had some other things I had to take care of, but a nice little short, 42 points, plus 3R, which is super, super nice. So now that we're down in this 15-minute demand, what should I be looking for? Well, it's really, really simple. I should be looking for longs. Why? Because our 4-hour bias is that this is a weak high, so we're coming to take this high out at some point, that this is protected, and this is the last 4-hour demand that we traded from. We shifted structure there. Let me zoom in so you can see. We traded from here. This was yesterday. We broke structure there, and we're just retracing for another leg up. So we should be looking for longs because this is the last demand zone on the 15-minute, right? So we're there. What are we looking for? We're looking for a 2-minute chalk to potentially look for longs, right? So right now it would be if price traded above here, then we potentially look for longs. And as that traded below, it then moved to here. And I'll make videos in depth. So there's your chalk. So this is where we should start looking for longs. You have a valid low. Got validated on that candle right there, right? Talked about this before. Let's just do blue for that. There's your valid low. It's chalked. You can assume that this is probably where longs are going to start occurring, right? So if it trades back into there after the chalk, I try not to trade it on the same candle. I'd like for it to trade back in this candle right here to go long. If it doesn't, cool, no big deal. If we get it close here, I'd probably count that as a break of structure, which we do there. So now I can start looking for other possible places to take longs. I'm still anticipating what? I'm still anticipating price to trade above these highs up into this week high. Now, one thing you will notice on my chart is this red box. This red box for me, all it means is do not trade shorts from this zone. Yes, it may be the last supply zone in the area, but it's also connected to a weak high. I don't trade from weak structure. Just don't trade from weak structure. Save yourself a lot of headache and all that mess. So again, we're anticipating price to continue higher. Why? Because our weak structure on a higher time frame is higher. Not only did we just flip structure here, allowing us to do what? That allows us to have a protected low there. We have a new order flow zone here, right? Talked about those before. So we're anticipating for them to trade down into something like that to potentially give us a long. And if it does, then great. If it doesn't, great. So this is kind of where I was looking to get long. I did not trade this, but if you were going to trade it, this would kind of be what you're looking at. I would probably put stops there just to keep it tight. If it stops you out, right? Like no big deal in the neighborhood. So it looks something like that. And it looks like that would have given a nice, simple trade, 3R, right before market open. So it would have been some nice, simple longs right before market open. Again, why did I choose that zone? That's our last unmitigated zone. So something that's unmitigated is A, completely not touched. That's like your prime zone. It's completely fresh. So you can see that this candle has now been traded into after there was a closure above. So when it trades into it, most likely you get a reaction from it. So that is nice and simple going into open. Remember, market hadn't even opened yet, and there are these two prime trades. If that was something that you're looking to trade, right? That would have been another plus 3R. That's an A plus setup for me. We go back to that 15-minute, and what are we looking at here? Well, we can see that price has just given us another chalk up here. It looks like it's about to make an internal break of structure, so it's starting to flip. We did have a couple down, so you had a couple swings down. It looks like it's about to flip here. Let's see what happens on the 15-minute. There you go. It flips right before open, so what should you expect? You should not be expecting to take shorts. We should be looking for longs because now everything's in line. Our swing is what? Our higher time frame structure is what? It's bullish. Our 15-minute, our mid time frame is now bullish. So now we should just be looking for what? Bullish trades. Bullish trades. It makes your life a whole lot simpler when you just follow those few things. So right here at open, it just takes off. Now, I had this supply just in case, it wanted to give me an entry. Now, if I go to that 2-minute chart, it never gives me an entry here. So that's just something that you don't take, right? You just say, okay, well, I don't need it. No big deal. Does not matter to me. And you can see price just takes off. Now, if price takes off without you, price takes off without you. So we'll just continue along this. We don't need this anymore. This was that 15-minute zone that I was looking to trade from, right? Let me see. It is. Let me mark it up right here. 15-minute demand. You can see, let's see, did we have anything below that red box that might, oh yeah, you had this last little area right here, I think. I believe that this has not been traded into. Sorry about that. That this has not been traded into as of yet. It would have been that one. So if I wanted to short, this would be the last place I have to short, but I have to understand two things. I have to understand where is my weak structure on the higher time frame, and how far can that potentially drop before it continues the other direction and kicks my butt, right? So when it gets in here, I can look for trades, but I have to wait for specific criteria. Right now that it's tapped, it has to trade all the way down here before I can even look for shorts, because that gives us our change of character currently. And if it doesn't do that, then I simply don't look for the trade. I just simply don't trade it. Now, if we get a chalk back up, yes, we haven't had a chalk down, but if we do something like this, then it's most likely, since it's already mitigated this zone, it's most likely just going to continue up. So it looks like we get that. Now we just look for the last little area. In this scenario, I would use this candle there, if that's something I was going to trade. So if it trades back down into that box, boom, there's your entry right there. Again, I did not trade this today, but if I was going to, it would have looked something like this. Because remember, I know where my weak structure lies. My weak structure lies above, so I'm more inclined to take longs. My weak structure lies above. And see what happens. And there you go. Sweet. Just like that. You would have hit that trade. Very simple trades by being patient. Now, what do you have here, right? We have a high. We have a low. We have a break. So we have a high. We have a low. We have a high. We have a break of structure, but what is this? This is a fake flip. Why is this a fake flip? Because this was unmitigated. Remember, we've talked about this before. This was unmitigated, right? So it comes down, it taps our last little area that we have, and then takes off. Go watch some previous videos if you don't understand that. And then if I wanted to take more longs, there's plenty in here, right? This taps into an unmitigated area. We get a chalk here, right? We get one. Nope, not on that candle. When it trades above there, and then if it would have traded back down into here, you could have found another long. But it didn't. It just takes off without you. No big deal, right? And we just go back up to our 15-minute, and now where are we at? We're not looking for shorts in this area. Why not? Why are we not looking for shorts in this area? Because it's the last supply zone connected to our weak structure. If this point here was protected, if this was protected, then I would be looking to short from this area. But since this is weak, we're expecting price to continue. Why? Price always wants to continue its swing structure until it flips, right? It's always going to continue swing structure. Remember, it broke here. This is where your swing stopped, and it just kept making new lows, new lows, new lows, new lows, new lows, new lows, until it breaks, and then it just continues to make new highs. Okay? Hopefully that makes sense. And then as we know, price stays right here. We're not looking to short. We're only looking to get in longs. We're just continuously looking for long opportunities. If you follow candlestick structure, you had a high, a low, a high, a low. It flips back up, right? Guess what you had here? This isn't an entry I would have personally taken, but there's an entry, right? There's opportunity here. There's opportunity there. Something like that. I don't know if it hits, but there was opportunity there. Let's see. There's opportunity there. And again, I'll be making videos about this. But this was a very simple day, guys. You just, hey, this is how simple it can be. What is my 4-hour telling me? Where am I at my 15? Am I in a fresh zone? completely untouched. Did I get my 2-minute entry model? And my 2-minute entry model is very simple. If I go up here, it's very simple, right? We enter a zone, price comes down. Say it's demand zone, 15-minute demand zone, right? When price is coming down, stepping its way down, all I need is this. Tap into it, shift, right? It can wick, it doesn't have to be a body closure, and then trade into the last demand zone here, stops below there, target 3R, right? It's very simple, and that's all I look for. Same on the top side. It's the same on the top side. If we have supply, 15-minute supply, and price is trading up, when it taps, I'm just looking for that change of character, trade back into the last supply, but stops above the high, target a 1 to 3. Very mechanical, very simple. I've been averaging about 60 to 65% win rate with this strategy. So yes, there are different nuances that you have to learn through backtesting, but it can be very, very lucrative if you just slow down and you wait for the trades to come to you. You don't force them. You understand where you're at. You understand where the market's heading. Because remember when I said down here, I said we should only be looking for longs from this point forward till it takes that high. So what do you see? A long, a long, a long. What does that do? If you took all these trades, if you took your 3 trades today, guess what you would have had? You would have had plus 9R. And whatever that risk is for you, $10 or $100 or $1,000, you would have had a very, very nice day because 9R is an amazing day, right? 9R is an amazing day. So just look at those. You just be patient. You let the market come to you. Don't do anything silly. Just be patient. And you're constantly annotating, right? And you're constantly marking up those charts. This is something I've talked about in my playlist. Video 1 is why should you annotate your charts? You should always annotate your charts so you know where you're going, you know where you're heading, you know where you should avoid, you know what's going on. Why do these charts look so messy? Why? Because I need to know what's going on. If I don't know what's going on, then I'm going to lose sight. I'm going to take a bad trade. I'm going to force a short off of this zone. When in reality, did I get a chalk here after we tapped this zone? Yes, guess what? I did. It's right here. It's right there. Let me zoom in. Let me zoom in. It's right there. And if I was going to trade this, if this is what I was looking for, I would have been looking for this area. And guess what? When it comes down up into that area, what happens? Instantly get smoked. Instant smoke. Why? Because you didn't understand, hey, this is a weak 4-hour point above me. This is weak structure here. This is weak. I should not be shorting from weak structure. If I want to short, I just wait till it takes this, sweeps something, taps something a little bit higher, maybe this last doji candle to possibly give us a pullback. Right? That's the only time I should be shorting. Either into once 15-minute structure or 4-hour structure gives us that chalk or something like that. So if 4-hour structure did something like this, then yeah, sure, I could start shorting, right? If we're up here and 15-minute structure does something like this, right, after we chalked, then yeah, I'll give it a chance for a short if I have room, right? But other than that, we just follow the plan. We just follow structure. Follow structure. It'll literally save your life. There's so less headaches if you just follow structure. And you do it multiple ways. There's so many ways to do it, but you can have a high, you can have a low, right? You can have a high, you can have a low. You can have a high, you can have a low. You can trade the internals. You can trade the externals. There's so many ways to do it. You just got to slow down. You got to find your strategy, which that's what I've been doing over the past 2 months. Is I've just been refining how I'm going to trade because it makes it a lot simpler, less stress. Right? So guys, super sick. Glad to be back on here. Was it July 2nd? Almost my birthday. Very cool. I'll catch you guys tomorrow. It's a half day in the market. Markets are closed Thursday, July 4th. And then just a heads up, I will not be posting a video on Friday, July 5th. I'm going to be spending the whole weekend with family. So you guys stay safe out there, and I'll see you tomorrow.